Hi, everybody. This is John Seroka with Seroka Brand Development, and we are waiting for some more people to join. We see the attendee number sneaking up there, so just give us a couple of minutes, and we will get started. All right, well, on your mark, get set, go. Hello, everyone. I'm John Seroka with Seroka Brand Development, and welcome to our webinar today. The topic of discussion today will be leveraging technology to enhance your referral relationships. So before I start, I'd like to thank our MTAM committee sponsors, Accelerate. Are you looking to close more loans in 2021? Experience Accelerate's award-winning customer engagement platform featuring lead management, CRM, call routing, sales enablement, marketing automation, borrower engagement, and data intelligence through innovative use of multi-channel marketing, including text, social media, email, direct mail, phone, ringless voicemail, retargeting, and so much more. Accelerate, helping lenders close more loans through better borrower engagement. Schedule your personal demo today at www.incellerate.com. So now let's jump into our discussion. With us today, I am thrilled to present to you Michael Guidotti with American Pacific Mortgage, Sue Woodard with Total Expert, Brad Engel with Guild Mortgage Company, and Robert Shumake with SimpleNexus. And as we go through this, everybody, please submit your questions and I will direct them to the right individual as they come up, or you can wait until the end and we'll have the last maybe 15 minutes will be Q&A. So with that, over to you, Michael.
Thank you, John. I appreciate it. And thanks for everyone for being on today. We're really excited with the group that we have here in a subject that I think is really picking up right now, given this change in the market. So really excited. Thank you all for taking the time. And Brad, Robert, Sue, really excited for the next hour or so here. All right. So first question that we wanted to just kind of dive into is, as it relates to leveraging technology to enhance your referral partner relationships, it really how you've seen the technology change the relationships between agents and lenders over the last couple of years. And
who do you want to start?
You go for it, Sue.
Okay, well then I will. And I'm excited to hear, I just grabbed my pen because I always get such great insights on these sessions from everybody else on the panel as well. But what I would say is some of the really key things are just the partnership that we're able to offer. I think it's very interesting when you look at, obviously we're coming out of kind of the refinance money machine, and if we're all being honest, probably a lot of folks didn't pay as much attention to their real estate agent partners over the past year as you'd like to. I mean, I've been in the business a long time, was an originator a long time, and it's just kind of the way that it goes. So I think some of the really awesome compliant co-marketing technologies that are in place right now that really, really support that agent's business, and I think more importantly, really automate things and make it easy. I think it's one thing to have a bunch of different things that you can do, but the power is when you're able to automate, right? Like know that there's a listing and be taking action on it without that having to wait for that agent to reach out and tell you, right? I think also as we're looking at just more and more data that's out there, the data that we're able to bring to bear, both for our own businesses, but how we're working with our co-marketing partners and really supporting them is the key. And again, it's taking that data, developing intelligence and insights, and then automation and action off of that, rather than, again, having to comb through things. It's letting the technology work for you, raise up those insights and make them actionable. I would say that's one of the biggest things that I've seen as a game changer, and hopefully that everybody's digging into as we kind of go back and really double down on those relationships that hopefully we didn't let cool off.
Just to piggyback on what Sue had said, I think that, at least for me, and I think that a lot of originators would say the same thing, is that the use of technology, if the loan officer for sure has adopted it and has been willing to adapt to it, is really a game changer, because in the demands of today's marketplace, where there's really, no one wants to hear excuses as to why you can't close on time. No one wants to hear excuses on why the borrower wasn't qualified. They really just want to know that it was done. You don't have a whole lot of opportunity for left and rights as you go through the process. So from the back end, once the loan is in process, the technology that can be utilized to eliminate documentation, to streamline the process, not only allows the entire underwriting process to go smoother, it also creates a much easier, more impactful, a better feeling experience for the borrower. And then, of course, on the front end, when you talk with most realtors, a lot of realtors want to know not only can we as lenders give them business, but also how can we help support and grow their business. Realtors, are always looking for that next deal. And so with some of the AI out there and some of the other software programs with indicators and projections of who particular people might be in the market to buy and sell, but you can really present these technologies to give the realtors an opportunity to very quickly, efficiently, and inexpensively hit a very large group of people, but be more targeted, right? Everyone always says they have too much on their plate, but if you could do this in a targeted approach and spend an hour or two with the right people, your conversion ratio tends to go up, and it makes it for an entire easier process.
Hey, Brad and Sue, I have a question for you. What are some of the struggles that you're hearing directly from agents?
Well, I can tell you the ones I hear most common. They're struggling getting listings for a host of different reasons. They're certainly in my area in Folsom and Sacramento, California. They are struggling with getting buyers into contract. And then the other really big struggle right now is getting appraisers to get out and turn their appraisals around quick enough, because we are in a world where everything has to be done in 3 weeks. The NMLS wants it done in 45 days. So there's a constant conflict on that.
Yeah, I think that there's going to be some huge advances made with the whole valuation process over the next couple of years.
Yeah.
And jump in there with what Brad was saying about agents attracting buyers. I think what we're seeing now too is how does that agent keep the buyer, and how does that agent keep that buyer engaged, excuse me, through that process? Because there are so many distractions out there for the buyer, right? They got a buyer, they're going out, they're cruising through a neighborhood, they probably have their Zillow app that they're looking at, and oh, this looks good, this looks good. But if you're already working with a real estate agent, how do you keep control of that buyer? And I think that's where a lot of this technology is really being leveraged by both lenders and real estate agents at this point, because you've got a lender that can provide that app on the phone for a real estate agent. They can keep that buyer connected. They can look and actually search for properties on that native mobile app that has the real estate agent co-branded with that loan officer. And so you have everybody connected to that one transaction. If they find a house, the buyer is going through and they find a house, they can IM their real estate agent. The real estate agent gets that IM, loan officer gets that IM. Everybody's in the loop, and they can coordinate to go after and keep that borrower engaged and get those pieces put together to put that offering on that property.
If I can mention something about that, you look at where the market's at now too. Like I was just looking at some year-over-year numbers, and year-over-year purchase applications are up 50% over last year this time, which isn't weird because we were all like what's the pandemic and what are we supposed to do? And there was a lot of uncertainty, but inventory is 52%, off from where we were year over year, and it's probably going to get worse. So I think exactly to that point that Robert was just bringing up, you have to be moving fast, right? You have to move quickly on things. And so that's where you're utilizing the power of technology to be able to come in and actually ensure that you're staying in contact. We know that, borrowers are double apping, they're scrolling through Zillow and all of a sudden they've accidentally applied with 5 different lenders and they're getting all these communications from all these realtors and all these, things. And so I think it's to exactly that point. It's like, what kind of communication are you putting in place and how are you automating that so that you can automating it in support of the relationship.
That's right.
Michael, in fact, I know that APM, you did some really creative things because I think you have improved your borrower retention. I think you've doubled it between 2019 and 2020 because you put some really cool technology into play.
Yeah, we had a huge jump between 2019 and 2020, I think up to almost 49%. As it related to some of the tools that we had used, personally here we were using, a combination between Total Expert, Sales Boomerang, and I think it goes back to some of the things that you guys were just talking about around getting those notifications up front, like what Brad mentioned, that AI, that information that's out there now,
Right.
and really how are you harnessing it, how are you leveraging it, and then also I think, tying into what Brad said around the adoption is the communication. Are you telling your agents all of these cool tools that you have? Are you really actually spending the time to adopt it and learn it so then it almost becomes second nature when you're having those conversations with your agents and you're really talking to it from an experience and a place of conviction where it's like, this is really going to help us, help me help you,
Right.
And so, that's definitely something that we've seen some advantages of here.
I have a question on top of that, Michael. And for Brad too. Knowing what Robert and Sue just talked about, you would think today that you have way too many buyers and not enough homes, right? And so the loan officer is very busy communicating with a lot of antsy buyers who think they want to make an offer and they can't get the offer accepted. So there's a lot of depression going on that you're not going to get that house, right? There were 17 offers on the first day. Using technology, though, can't the originator really perfect a better strategy by leveraging data at the point of sale to be the first in line to submit the pre-approval letter? And how are you overcoming those objections today?
Well, that is a major question, and I call it buyer fatigue, where they just they give up. Every time this year, people from October are very frustrated. There's not a lot of inventory, and then they give up, and then you have the normal seasonal increase in inventory come in, and all of a sudden the buyers that are still hanging around start getting into contracts. So what I really do is I'm not a very dramatic guy. I really I like to look at the data rather than and try to pull that emotion out. I know it's very hard when you're a first-time home buyer or any buyer for that matter. But if I can overcome that objection, Joe, about that fear or that frustration and say, yes, I understand there's not a lot of homes on the market, but did you know that in our region, there was a 33% increase of homes from January to February? So that 33% is a big number. Now, so I try to keep them in the game and that it doesn't cost anything to have your lender, your agent still send you leads. So just keep looking. From a loan standpoint, what we need to do is we need to get your loan, to the 20-yard line, actually get it fully underwritten. Let's get you taken care of. So we basically make you into one of those cash buyers, take all the fear away from you as a buyer. So the only thing you need to focus on is when that right house pops up, you can pounce on it, and people will stay in the game based on that.
Yeah, that's cool. Michael, you want to jump in on that?
Yeah, and I think Brad hit it on the head. The buyer fatigue is something that's really something to be mindful of, because it is something where it's like anything, you get told no so many times, or you're seeing homes going for in this area 50, 60, 70,000 over listing price, and people were like, wait a second, like the affordability issue really comes into play. And I have a buyer couple that I've been working with for a long time, and they just happen to be friends, so I might have been able to be a little bit more honest with them, but it was really they had 4 homes up in the Auburn area that they had put offers on, and each one of those went for $70,000 over asking. And they were like, what do we do? And I said, you're kind of at that point, you have to make the decision. Are you willing to compete in that space or wait it out? You know, and so I think it's just having some of those conversations to really just react to what the market's doing right now.
Yeah. So on top of that, then this is my follow-up to that. Okay, now we know that we want to buy this new home and we want to get this thing, but we know there's way too many offers on that. Sometimes borrowers need to change their strategy, and if they want to buy a home, they may have to buy that fixer, and that might change the dynamics because you need some more cash to fix it up. How does that change in your qualification standards if you finally have somebody that says, okay, I just got to go buy that fixer and create it to be one of my own? Is that a strategy that you're using today or something you can work on? Or?
I certainly am. I think that I start from really the question I ask is, how bad do you want the house? How bad is your living situation? You know, you're living with your mother-in-law and your father-in-law, you know, and that's not a sustainable situation. So the motivation really needs to be there, because if someone is really in a spot where they really have a need to get into a new house, they will be more willing to listen to, instead of, you know, being contingent, maybe pushing it a little bit to qualify for the new house, sell the other house after closing, look at bridge loan options, look at those rehab loans where you're going in and you're finding a house that it needs a little bit more work. But, you know, it's always, you know, someone who's a smoker who doesn't want to quit smoking, it doesn't matter what you tell them, they're not ready yet. So the buyers kind of need to go through their own emotional roller coaster until they find out, hey, this is their situation. This happens to be the market that they're in. And so these are the strategies you can employ to work it so that you can get into that house. But until they're ready to listen, you know, it's like a teenager. They're not going to listen until they're ready to listen.
Well, and I think that's a really good point too, because I think it also ties into the communication back with your agents. You know, a lot of times I think that there can become that disconnect between, you know, the conversations that we're having from the lender side versus what the agents are, you know, talking to the borrowers about. So I think it's also too, you know, again, talking about that communication gap, talking about ways to leverage, you know, that technology, whether it is using a centralized portal like a mobile app, where, you know, you can even have those conversations with the agents of, you know, what are you showing them? What are some of the things that you guys have been looking at? And just then really making sure that everybody's kind of on the same page and really being those kind of advisors together versus two kind of bifurcated processes and workflows.
Right. And just to bring that back to kind of the technology idea here, at Guild, we have a Salesforce as our CRM. And what we do is, as we're updating our borrower files and notes about conversations we have, there's literally a button that says update agent. And I click that button and it sends my notes directly to the realtor. So even if I haven't had a chance to talk with that realtor, or I just can't make one more phone call, at least they have the communication that they now know, like you said, Michael, that we are together in our communication, so that everyone's working towards the buyer's ultimate goal.
Well, and I think that's almost a perfect segue, because we've actually already talked about it a little bit, but, you know, it's really around the inventory shortages that we're seeing right now. And, you know, we know that, you know, right now it's not looking to get too much better, you know, in the near future. And, you know, how do each of you really see technology playing a factor in how lenders are going to be able to win more business with their referral partners, given these inventory shortages that, you know, are really nationwide, but especially here, you know, focusing on California, you know, might be one of the worst in the country as far as, you know, the inventory impacts right now.
I would just, you know, I think Brad just said some really good things about this a minute ago. And I think it is partly, you know, sometimes I think in the industry, because we're just, you know, we've been through this, we've been through these cycles, you know, and kind of up and down and, you know, kind of how it goes. And I think we forget sometimes, or we shouldn't forget, I'll say, the emotion that buyers are going through. You know, a refinance is typically not a very emotional experience. It's a more financial transaction. You know, it can be life-changing. You know, put $600 a month, you know, in somebody's pocket, that can be life-changing to them. But I think we need to not lose sight of the fact that when somebody is moving, and they're purchasing a home, generally a life event is happening, right? Somebody's getting married, somebody's getting divorced, somebody's got a new job, somebody's been born, somebody's died, something has happened. And then you kind of compound on top of that with just all of the uncertainty and weirdness that we have in the world right now overall about so many different things. You put on top of that the stresses of the inventory issue, and like, if I'm not there first and offering 100 grand over, you've got all of these things. And so I think what Brad just said is so important in terms of just communication. I mean, it is amazing to me when you think about so many of the things in life that would be made better by just better communication. And that's what it's all about. And I think you're spot on. As we're in this environment, as a lender is able to connect up and show that unity and really good communication between the agent, the lender, and that customer, and being mindful of the fact that they might need a little bit more communication than maybe, we might think because of all these things they're dealing with. And that's where technology, again, I think can come in. And especially if you've got like the intelligent automation, like the journeys, where you're actually able to, adjust your messaging and your pace based on what their needs are. And then be able to be there for that customer with the right message at the right time when they need you.
You know what, to piggyback off of what Sue was just saying, it's like the communication, I would think like very personalized communication, because I think that agents have all of these different, I would suppose that they have several different apps, from several different lenders that they have to pay attention to and log into, here and there throughout the day. And I suppose they get push notifications as to what's happening with their borrowers and transactions and whatnot. And making those push notifications valuable and with next steps included, or some type of action item, and so like a status notification, right? Is that?
Yeah, absolutely. And I would kind of take a step back to here and get to that point. But when you look at what we were talking about the inventory and the shortage of the inventory, and also when you look at, there was an article, I think late last year, we sort of passed that point within the industry that now over 50% of the buyers are now in that millennial generation, right? So you've got low inventory, you've got a huge chunk of millennials that are in there. I think it's like 52, 53% are now buying. They're taking over the buying market. And I think what it comes down to is you need to communicate with those customers based on their terms, right? How do they want to communicate? How do the millennials communicate? John, you mentioned there about the push notifications, and that's how they communicate. They want to know right now, my house is ready, or my loan status just changed from approved to funded, or whatever those push notifications.
Appraiser was inspected. He finished his inspection today.
Exactly. You want that instantly. And so I think understanding from a technology perspective and from that end borrower, that customer perspective of how does that customer want me to speak to them? And if you can do it based on their techniques, the mobile app, whatever it might be, that's going to be the key to being able to really communicate with that customer and retain them closely.
I think, and it's so funny as you talk about that, is even just the millennial aspect of it as being the biggest, buyer right now. And it's just thinking of some of the things around technology. And I remember sitting at a conference like 2 years ago, and somebody said this, and it really has resonated with me over the last year. But the largest now food industry doesn't own a restaurant, and it's DoorDash. Everybody's ordering food on their phones. The biggest travel as far as taxis doesn't own a single car in Uber. Biggest hotel, Airbnb, doesn't own any actual thing. So I think it's just seeing how people are using technology, using these apps to really do everything. And I think after last year, so many people had to adopt technology because things went remote. People that had never done a web conference before, now we're working 100% of the time on WebEx, is like what we're doing right now. So I think this is going to be, as things start to, normalize, whatever that means, depending on where you're at, it's going to be interesting to see how that technology continues to be leveraged, if people really double down on it and really lean all, towards it, or if we start to see a little bit of a backslide. And I know for us, we've just seen, you know, our technology adoption go way up from our loan officers to our clients, you know, that are using, you know, their mobile app to upload documents through the system, where, you know, people that would never enter in a piece of their information on a web portal before are now doing, you know, uploading things with tons of sensitive information directly through these portals. So I think it's going to be a very interesting, you know, next little period to see if that really continues to shift. I don't know what some of your thoughts are around that.
Michael, what about technology adoption from a processing standpoint? Processing and underwriting.
Yeah, I mean, there's a lot of technologies coming into the space where, whether it's, you know, automated conditioning, you know, there's some tools out there where you're getting that, I can't think of the, but where, you know, it's optical recognition software, where ICR and OCR. So, you know, you're getting, you know, systems that can read the documents, where your processors aren't needing to spend necessarily all of their time, you know, reading through a tax return. You know, there's tools out there like a Loan Beam, where they can actually read tax returns, you know, read those documents and just give you what you need. So then you can start doing the things that are, you know, that really you need a person to really process or, you know, understand. So I definitely think that, you know, that the technology is being leveraged, you know, more and more, even on the processing side.
Yeah, how widely is it really adopted though? Because I understand that I read this study, I think it was an MBA study, where companies or processors could process like 4 times as many loans in a day if they were leveraging the right technology to do it, right? And that's got to be a huge boost for customer and satisfaction.
It is. Just to jump in, some of these things that are available, you can get income information now through websites at Fannie and Freddie read automatically. You can do the same thing with bank statements. I was just on a call yesterday at Guild, and it all starts with the loan officer. I don't think that it's the responsibility of the processor 2.5 weeks into the transaction to see what can be automated. So again, if up front at, you know, kind of that point of sale, if the loan officer, and, you know, we are an aging industry, so we may not be inclined to do it.
What are you saying?
Including myself there too, right?
I think I'm the oldest one here. I think I'm the oldest one.
There is that automation that's available, and if you and the loan officer and their team up front can automate income assets, maybe get an appraisal waiver. You know, if you get that thing lit up 3 or 4 greens in a row, that goes all the way through. So it does allow the processor to spend their time on other things or other files if you can manage the automation. It's not perfect, doesn't happen on every file, but certainly it should be attempted to automate it on most files.
Yeah, as Robert would show you in his app, obviously they do that all the time. He has all those built right in. Permission authorization by the consumer is so important in today's environment and all those things. But I think the education has to come up too. Brad and Sue and Michael, you all said something really important, because we need to educate our loan officers how to work in this type of environment, right? Now we're trying to help them automate. Now they're adopting technology, as Michael said, much better. Now we need to educate them on the e-closing process, because they're not good at that at all either. They can't explain the reasons why you would use a day one certainty automated income and asset aggregation. They don't really know how to pitch that to the customer. Now we really must show them how they need to focus on e-closings, because now what are we at? 37 states? Robert, you want to get in on that?
Yeah, no, you're absolutely right. And from that e-closing piece, and that the e-closing piece really ties in to, I think it's kind of like the linchpin right now for the industry, because the back end has been trying to get that done for what, 5, 6, 7, 8 years probably in a serious fashion. And it's been going in spurts and sputs and hasn't really taken off. And the front side of things, the real estate agent, the loan officer, the borrower applications, they've been trying to catch up, but they were sort of disparate systems. It was not seamless really. And so now I think you're seeing that technology mature to a point where a borrower can actually take that process from start to finish with a single sign-on. Just here's my username, here's my app, boom, I can go from that application I can go all the way to the e-closing piece with a single sign-on, beautiful, it's easy for me to do. What I think we're going to see now is that, as I mentioned, the linchpin, I think, or I used to call it like the third rail in our industry, was the closing agent, right? We tried to roll out e-closing a few years ago and didn't really work too well. There's lots of pushback, lots of issues with that, and so it kind of moved back a bit. But now, where you have the ability to have the borrower have the single sign-on up front, single sign-on at the closing, now you can engage the closing agent with a simple, intuitive way to do that. Now you've got that closing package. Maybe it's not a full digital closing, but it's bits and pieces. Those will begin to move back into the infrastructure that's already there on the backside. And there is where you're going to see the scale, because you've got your dwell times are going to drop. On the warehouse lines for the IMBs, they're going to see that go to the bottom line. They're looking at margin compression and lower volume, so they're going to be scrambling to look for ways to create income. And so you've got those pieces coming back. You've got less shipping costs. You've got those lost note affidavits that will eventually go away with the e-notes. And so everything's going to move now, I think, from the perspective of digital closing, because it's there, it's easy. You're going to get the back push in and say, let's go, guys.
Yeah, but Michael and Brad, I mean, as origination side, are you really educating your loan officers? Do they really know about some of these choices and options that are available? Are they getting calls and questions from consumers? And are you leveraging your, Sue's tool to help educate consumers?
Well, I certainly run it through on every file. I mean, just for the transformation of just basic technology up until, I guess it was the start of the pandemic, I probably did 95% of my loan apps on the phone. I took it down on notes and I handwritten it and I hand put it in there underneath the mistaken premise in my mind that was how I connected with the client. That was a better way to start a client service relationship. And then because of the pandemic, I was forced into doing it through our web app. And what I found is that now I'm completely the other way. Now I'm 90+% doing web apps because I offer it to the clients. Would you like to talk on the phone? And invariably, they choose to do a web application because that's the way the world works. It's not the way I want to do it, but I'm not selling to myself. I'm selling to the people out there. So when they do the web app, I go in and we pull the data and we start pulling it ourselves. And then the sale part is I say, hey, Joe, thank you so much for filling out that web application. By the way, you notice I only sent you 3 things that I need from you because I have everything else automated and verified. Your loan's already approved online. We turn the underwriter into a box checker. So as soon as you send me those things, let's talk about the loan, set the terms, address all your questions, and get you out there and start looking. And so they think that I, have done some magic wand because, well, the last time I did it, 10 years ago, I had to send in everything. So that's how I use that technology to.
Are you communicating through the portal, Brad? When your customer comes into the portal, are you communicating through the portal or are you sending outside banned emails to them?
I will go in and through and pull the loan data from our portal, and then I will usually set up. Now I'm doing a Zoom call. By the way, you can do twice as many appointments in the same day on Zoom as you can in person. So
yeah, driving to a place is very difficult nowadays.
And so then I will do a Zoom call. I'll do a screen share and I'll show them everything. But that communication is going to typically be through phone, text, or email through our systems.
If I can make one comment on that, I think it's very interesting when you think about the timing that we're in, where everybody learned because they had to. Oh, look at what we can do now, right? And it's kind of like
we've had it for a while.
Roger Bannister, think about the 4-minute mile, right? Where nobody could do it until suddenly he did it. And then now thousands of people have run a 4-minute mile, right? And so you kind of think about that. And I actually think we still have a very rare opportunity when you're thinking about how are you bringing in technology, creating opportunities for change with both our originators as well as for our customers. People weirdly are more receptive to change, especially change that is, driven by technology where they've got the options. So I think we still have a really nice window to bring in some of these changes and say, hey, this is the way that we do it now. And people are like, okay. And suddenly you're like, wow, it's so much faster. It's so much easier. It's so much more efficient.
That's the lesson of the whole webinar today.
Yeah, but it's true. The window's open, so we just have to have the courage to walk through it, right?
And
I'll agree with you there, Sue, because we talked earlier about the millennials and they're the block now. But as you said, as this pandemic that we've gone through, and you have the older folks that didn't really use technology before, and like, DoorDash was brought up. Now people are using DoorDash. People that didn't want to go to the bank, and now they deposited a check via their app. Oh, hey, that was easy. That's good. I can do a loan this way now.
Money showed up.
The money showed up, and so it's given them that comfort level to now understand, like, oh, this is easy and it's not scary, and I'm not going to lose anything. I can do it.
Yeah.
Hey, Sue and Robert, have you seen more engagement with real estate agents over the past year with your tech?
I'm sorry, you kind of broke up on me in there. Could you repeat that?
Sure. Have you seen more engagement with real estate agents with your technology?
Absolutely, and that's been probably one of the biggest growth sections that we've seen within the industry. And I think when you look at it, you're asking specifically about us, but yeah, we're
Right.
probably about 35,000 total users, meaning loan officers within the system. When you look at the total number of referral partners that are connected to those real estate agents, it's about 4 times that. And so you really see that engagement of real estate agents understanding, oh,
Wow.
this is great. I can talk with the borrower, I can talk with the loan officer. We're all in that same wound up chat. I know what's going on.
Mhm.
And so that engagement has been phenomenal growth.
Yeah, and
That's awesome.
just to piggyback on what Robert said there, I know for us, specifically, we have about 10 agents for every loan officer set up on the mobile app. So, we're seeing, our loan officers really take that initiative to connect with their agents through there.
Sue, how about you? Have you seen a lot of engagement from agents?
Absolutely. Yeah. And it's also been from the loan officer side as well, connecting their agents, because I think there's been kind of an awareness of, holy crap, I'm so busy doing refis. I got to make sure that I'm doing something to add a lot of value. So I think we certainly have seen that. And also I think there's just some of the functionality where people are they weren't able to do, and still can't in some cases, do some of the things that they were used to doing. They're having to break those patterns, break those habits, saying, okay, how do I leverage technology a little bit better? And even as people were getting started doing back, in some cases, I don't know, are you even doing open houses in California? Is that a thing yet? Or are you not doing open houses yet? Like, I don't even know. But like, one of the tools is like a lead capture app. Like, instead of like the way that people used to go into an open house and they'd fill out the weird form on the clipboard, and then nobody'd ever see it again. Nobody'd follow up with that borrower. The loan officer never got those leads. Being able to present, hey, lead capture app, just for safety and security. The seller needs to know who's coming into the home. And so we need you to, sign up here. And then all of a sudden you're starting this beautiful co-marketing campaign, being able to say, gosh, thanks so much for visiting the property at 123 Palm Street. We're looking forward to. And so again, we've seen a lot more engagement and a lot more just, really creative usage of the tools that we have.
Mm-hmm.
Yeah, it's the same way to add to what Sue was saying there too, with that mobile app too. If there was an open house in California, Michael, if we do have those, but in other places where the agent's in the house and they get 1 or 2 or 3 or half a dozen or 2 dozen if it's California, people coming through taking a look at the house, and they engage in a conversation. Now we haven't applied with a lender yet. Oh, well, you can talk to my lender, and they share the app directly to that borrower. So
Yes.
it's an immediate warm handoff from the agent to that potential buyer. The LO is immediately notified. Oh, I got a warm app. I can reach out immediately and talk to that borrower. So again, from a urgency perspective within the industry, right? You get that immediate connection, and you make that connection, and it's instantaneous.
What are the biggest ways that you folks see technology being used to enhance communications with agents right now?
Oh, I'll take that one if you don't mind. I probably every 5 out of 10 phone calls go to realtors, their voicemail is full. By the way, I don't think very many millennials like to talk on the phone. So again, so texting, right? You know, you get a lot of voicemails. You know, for a quicker response, please send me a text. So by using technology, we can, you know, you can either use your phone. In our system, there's actually an internal text through Salesforce that logs everything, which is kind of nice. It's allowing us to communicate in the way that works for the realtor, that we get a response, then we can turn it back to maybe a phone call or some other type of communication. So, you know, you leaving that phone call or trying to get a hold of somebody is no longer something that really works in our environment anymore. And so certainly texting allows us to get them to respond very quickly. Although I will tell you, the old joke is, you know, if you want to get a realtor to give you a call back, you just call and say, hey, I need you to call me back about your commission on 123 Main Street. And that phone call will get returned very quickly.
Yeah, and that's you know, to just piggybacking on that too, you know, we're seeing it in a few different areas, and you know, one is just the updates, like what Brad mentioned, you know, whether it's text messages, you know, for us, you know, in the mobile app, you know, one of the things where what we are seeing is, you know, some overlap now, you know, where some of the realtor offices, some of the bigger agencies, you know, the Keller Williams, the Remaxes, some of those organizations are getting their own mobile apps. So one of the things that I've run into in conversations with our loan officers is even, you know, my agent says, you know, why would I use this when we have our own internal one? So it's, you know, tying into the things like, well, you know, the milestone updates, you know, that are going out through our mobile app that aren't going to go out through yours. The things like the loan status updates that we can send out through Total Expert, where it's then sending it over to the agent. They're seeing, you know, when the appraisal's coming back in, and those details that aren't necessarily going to show up in those third-party, you know, apps that the realtors have. So I think some of it just really then ties back to that value proposition that the loan officer has. And again, the education, you know, I think it's our responsibility as the lenders to educate our loan officers, but then really drive home the importance of them taking that education, you know, applying it, and then going out and educating their agents so that they really know the whole package that that loan officer is bringing to the table when they're doing a transaction with them.
Right on. You know, the other phone call that an agent will take is, hey, I've got a new lead for you. I've got a buyer that's interested. Would this be a fit for you, right? They'll return that call. So I think, again, as you're utilizing technology and using smart technology where you're, you know, you've got the database, you're able to generate those opportunities, tee up those leads, and then, you know, direct them back to the appropriate agent. That's, you know, they'll take those calls all day long, right, Brad?
Right, absolutely.
So one other thing I wanted to kind of see, and you know, start out, I guess, with Robert and Sue on this, but really, you know, we kind of know where we're at right now for the most part, but how do you see the landscape changing over the next 2 to 3 years as it relates to lending technology as a whole, you know, really focusing on the agent side?
I think I'll start off there too. I think I kind of swerved into that a little bit earlier about talking about, you know, the adoption of e-closing and how you're going to see the back end start pushing forward to really get that adoption going. So that is definitely one thing I think we're going to see in the next couple of years, if not immediately. But I think one of the other key drivers or key things that we're going to see, and this is probably a shift in the industry too, is that the point of sale piece is very likely, I think, going to become the key to the e-closing piece, because it goes back to what we were talking about that single sign-on experience for the borrower. So if you're signing on with your login to make that app, you're going through, you're signing your disclosures, doing everything else, you're going to have that single sign-on experience, or you're going to want that borrower to have that single sign-on experience at closing. And so for that piece, I think it's really going to be that point of sale and the single sign-on experience that's really going to drive the full adoption of the e-closing piece.
You know, what I would say is on the, just on kind of the technology front overall and how it'll, you know, what I see coming in the next several years. And it's interesting because things change so fast, right? You can say on any given day, things have never, it's like it'll never move as slowly as it is today, and it'll never, it's going to only ramp up going forward, right? It'll never be this slow again. It's going to continue getting faster and faster and faster. But the big things that I see coming that I think are really relevant are surrounding probably data and intelligence. So we have got such a massive world of data, and especially when you think about it in the lending industry and the very personal questions that we ask. I mean, I love what Brad was talking about earlier, because that's the way I originated. This is partly how I get to know you and ask the right questions, is when, you're able to see all of this extremely personal information that literally is the stuff that your parents said, don't ever ask somebody these questions. First day out of the gates, never met you before. I'm going to ask you how much money you make, like you married, you just living together, like, oh my God, look at your debt, looks like a late payment. What's that gap in your employment? Like the most personal questions ever, right? So that gives us this mass of amazing data to do things with. And I don't think we are doing enough yet as an industry. I think there's some vendors that are doing a good job out there with data, Sales Boomerang being absolutely one of them, of being able to be a lot more predictive with that data. And then I would say on top of that, we need to ask more questions of people as well. Sometimes we're trying to creep through all the data and like guess what it is that they're going to do. Well, how about we maybe just do a better job asking, right? Maybe there's some technology we can start to leverage where we literally say, where are you at in your life? Are you more looking at, is starting a new business kind of more where you're at, or starting a family, or, like, why don't we ask some questions and marry all this together? And so I think as it pertains to agents, being able to take the intelligence that all of this data is giving us and really track to insights, and then automate, what do we do with those insights to educate that person, to bring them back if there's something that we can do for them at this time, but really just be that financial partner, whether it involves a real estate transaction immediately or not. But I think it's, the data and the intelligence, and then automating it and really surfacing all of those insights are some of the key things I see going forward. The only other thing too is, and Robert touched on this earlier, is really just the APIs. There's been so many disparate systems all over the place, a lot of solutions that aren't talking to each other so that the data can't be cohesive. So I think as we improve, just kind of our API strategies going forward as an industry, it's going to enable that data and intelligence.
Hey, everybody, we have an audience question. Just got in here from Dustin because my questions tab isn't working, and I think that this person's probably been waiting a while to get an answer to it. So here it is. In our connection economy, the connection and relationship is so important. That, along with the demands of the consumer, everyone involved in the transaction needs to be on the same page at the same time and communicate it together. I would love to hear from this star-studded panel, what can lenders do, or what technology can we leverage to ensure the connection?
That's actually a really good question, because one of the things I was going to say at some point was, the technology is great, and it helps us be more efficient and close more loans, help more people buy or refinance their homes, really create a better experience. But when it all comes down to is we still have to, like that question from Dustin, have some sort of a connection. And sometimes we can get so excited, so adoptive of technology, we kind of forget that there's still a person there that has some questions. And so the technology is great, and it's a great way to enhance what really needs to be the core relationship is between the buyer, in this case, a realtor, and then the lender. So when it comes back to, while people want to text and they want to do email and they want to do things at their own time, the good old phone or an in-person meeting like we used to, or at least a minimum a Zoom call, allows for that interpersonal connection that is so important to build that trust, right? What's that old mantra, right? When all things are equal, people buy and sell from people they know, like, and trust. And at some point, every loan officer, every realtor has to find in their own way to make that connection of trust, because that's how the business will flourish. And ultimately, you always want, the goal is, at least I believe, the goal is that the client at the end needs to feel that they had a really positive experience. They will forget about the frustrations and the pain in the ass up front if there is a good feeling at the end. And the only way that we can do that is to maintain some communication. So, you know, we always tell our loan officers and anyone else that I ever talk to is that we got to have at least 1 or 2 touch points with that client per week, and the realtor as well, so that everyone is on that same page and that individual doesn't feel like they're getting lost. You know, that's the or I should say the low touch. You know, some of the big companies that just really slam through the volume and they're so tech heavy. The complaint is that, you know, when there's a question, when I don't know what to do about, you know, I got a question earlier today about a pool. Well, it has nothing to do with the loan, but they want to know about credits. Well, that's a conversation. That's not a technological thing. So I really think that somehow that interpersonal connection is super, super important, and really at the core of what we're doing. And all this technology just kind of dances around and enhances that ultimate relationship.
Yeah, I think that's a great way to put that, Brad. I think, and I'm relating that to a customer that we have that kind of went along that same route, you know, and they were outside of that box that we were talking about earlier about millennials, but they use our technology, but it was an older gentleman. He's about 82 years old, a farmer, and he was getting a loan with a small community bank in Texas. And so went through the process. The LO was engaged with the gentleman. Everything went great. It was just an overall fantastic experience, just from interpersonal and from a technology perspective. And this older gentleman was so enamored with both the loan officer, the technology, and just the process in general. He went in, met with the bank manager and said, you know, this has been great. I loved your LO. Everything was great. And what I'm doing now is I'm going to move a $2 million deposit into your branch just because your service was so great. And so, like you said, making those interpersonal connections and making that it kind of going old school, but going technology wise too. I think that's going to be a key to personalize, but make things a lot more efficient.
Yeah,
Hey,
I think.
Brad,
Oh, sorry.
go ahead, Sue.
Well,
Go
I
ahead,
was just
Sue.
going to say, you know, technology is, you know, which I'm a fan of course, and whether it is, you know, whether it is Total Expert or SimpleNexus or First Close or some of these amazing technologies, you know, going to the question that the person asked is, you know, the best technology is going to be the one that you use and that it powers your success. I mean, I never sit here and tell you there's one magic bullet to solve all of your problems ever, right? But the technology is here not to replace people. You know, what Brad just said is really important. You know, people do business with people. They don't do business with companies or with technologies. People do business with people. Now, the key is, you know, the people that are utilizing and leveraging technology to free up those opportunities for when that person does want you, you're actually available because you're not there doing something that should be automated. That's the magic. And so that's what I would say is just that, you know, we could give you a list of, and again, I think some of us here on this call are certainly partial to, you know, to certain technologies, but I would tell you it is the one that you're going to use, and how does that power you to still have those human connections where they are so important, where we have people involved that are going through something very human. I think that's the key.
Hey, Brad, I have a question for you. Have you run into anybody in the field that has asked you about tech platforms, any agents out in the field that ask you about technology platforms that could help them improve their businesses?
Sure, I get it all the time. It usually surrounds, it usually comes out in how do you follow up with everybody so consistently, and I like your videos, so what are you doing? So it's a training on how to leverage some of the technology, you know, video through BombBomb, you know, which is a great video platform.
Yes.
Or how do you use a CRM to stay in touch with people. And usually the starting point is that their idea of a CRM is an Excel spreadsheet. So we kind of have to break it down, and then we give, you know, there's lots of different ways to mine that data. They usually don't have the data, but the question is always there, because I think that most realtors realize that what they're doing in this running around in chaos, and, you know, 3 or 4 deals, they get really busy and they forget to market, they don't do anything, and then they wake up one day and they don't have any more escrow, so then they market again and they get busy again, is crazy. And they know somewhere down there that they need to change it, but they just maybe need a little bit of help on how to get it set up. Again, they're the ones that have to implement, but I get the question all the time, and I show them, this is what I do. This is how I automate my system. This is what I do to create technological efficiencies, to touch more people in a very quick and efficient way that creates the consistency that they're looking for.
Makes sense. That's good. All right. Well, you know what? I don't see any other questions coming in here. Hey, Dustin Hobbs, are you there?
I am. No more questions at the moment.
Do you have any questions coming in that I'm not seeing?
Nope, you got them all. Just in
All
time.
right. All right. Does anybody have anything else that they want to add in before we conclude our webinar today?
The only thing I would say is if you heard something that you like, or there's a technology that you're sitting on and you know you're supposed to use, the difference between the people who are doing a lot of production and the people that are not are those that do a lot of production are quick to implement. So pick one thing and do it. Just make a commitment to do one thing, change 1% of your business, and you'll see it change, but you actually have to do the implementation.
That is great advice.
Yep.
Excellent. All right. Well, look, hey, thank you everybody for attending today, and we appreciate you. And please let us know how we did. You'll be receiving a survey shortly from Dustin, and if you could please answer a few questions, take a few minutes, we'd really appreciate it. Let us know about any topics you'd like to hear about on future webinars as well. So thank you all, and enjoy the rest of your days.
Thanks, guys.
Thank you.